What's up, traders? Welcome back to my YouTube channel. So in this episode of my YouTube videos, we are going to be talking about what currency pairs are and the type of currency pairs that are what traded in the forex market. One thing you need to note, or one thing you need to understand, is what the type of currency pair you trade is going to determine the commission you are going to pay on your trade. And the liquid the currency pair, the lower the spread you are going to be paying on the trade you are executing. So you have to make sure you are trading currency pairs that are very liquid. A lot of people are trading such currency pairs, so that you are going to be paying less commission or less spread on the trade the currency pair that you are executing. So we are going to dive deep into the various types of currency pairs and the ones that are most traded in the forex market. So kindly like the video, and if you are new to the channel, please kindly subscribe to the channel so that you don't miss out to any video that will be posted on this channel. Let's get straight into the video. So by the end of this video, I'll make sure you understand what is traded in the forex market and the types of currency pairs that are most traded in the forex market, and the type of currency pairs that if you are a beginner you need to focus on to trade in order for you not to be charging a lot of commission or spread. So let's dive straight into the video. So what is traded in the forex market? So when you talk about forex is simply or currency trading is simply exchanging of currency. So you buy one country currency and you sell the other country currency. So that's exactly what we do in the forex market. And as I said earlier, currency in the forex market, we don't trade currencies as a standalone. So you buy one country currency and you sell another country currency. That's exactly what we do. So we buy and sell currency. We don't do any other thing than buying and selling of currency. So currencies are what is traded in the forex market. So the price of a currency is a direct reflection of the country economy. So if the country is performing very badly, it is going to affect the currency too as well. So you need to always pay attention to what is going on in the country or what is going on in the economy, because it's going to have a direct reflection or direct effect on how the currency is going to be performing. So that's why mostly when we are analyzing a market or when we are trying to predict where the currency is going to head to, we mostly do factor or look at the macroeconomic events such as the inflation, the interest rate, the GDP. Factor those things all into consideration. You need to factor into consideration the geopolitical events, the wars, and those things. Factor all those things into consideration before you either execute a buy or a sell, because whatever is going on in the country is going to have a direct reflection, as in if the country is going to be performing well, if the currency is going to be performing well, as in maybe appreciating in value. If the country is doing well, the currency too is as well going to be performing well. And if the country too is also performing very badly, the currency too is also going to depreciate in value. So it's always important to factor, or it's always important to consider what is going on in the country so that you make decision on what the currency is also going to be doing in the forex market. So in the forex market, what basically we do is we buy and sell currencies. That's the only thing that we do. We don't do any other thing than buying and selling of currency. So it's always important to consider what is going on in the economy when you are trying to make decision either to buy or sell in the forex market. So when it comes to the forex market, we're having tons of currency pairs that you can trade, coming from the developing country to the developed countries. We're having a lot of currency pairs that you can be trading. So we're having major currency pairs. So the major currency pairs include the Australian dollar, the New Zealand dollar, the Canadian dollar, the Japanese yen, the euro, the Great Britain pounds, the United States dollar, and the Swiss francs. So these are the major currency pairs. So mostly I call them the safe haven. So this means that no matter what is going on in the world, these currencies are still going to be, the chances of it being stable is very high. So when it comes to these currencies, a lot of investors will love to push their investment in these economies, because most of the times, no matter what is going on in the economy, these currencies are still going to be stable. Even if they are going to depreciate in value, it's not going to be massive as compared to the developing country currencies. When it comes to the developed countries, or when it comes to if you are having money, or if you are having your investment in these economies, it is very hard for you to lose most of your investment. So most investors will love to move their investment in such economy. So that's why they are called majors. They are called majors because they are most traded currencies in the world. So a lot of transaction happening in the world, like maybe if someone wants to buy oil, if someone wants to buy any commodity like gold and those things, they normally exchange it with these currencies. Okay, so maybe if someone wants to buy
If someone wants to buy oil in Saudi Arabia, mostly they exchange it with either what the United States dollar or maybe any of these majors. You get it, because they are most heavily traded. Most of the commodities are what being exchanged with this. Most of the commodities are being exchanged with this what these currencies. So please take note. That's why they are the major currency pairs, because they are the most heavily traded currencies in the world. So when they are it represents some of the world's largest economies. So as I said, their GDP, this country GDP are very high. Okay, this country's GDP are very high. So there are a lot of things going on in their country. A lot of things are happening in their country. Okay, productivity is very high in their country. Employment rate is very high in their country. Okay, it's a political stable country when it comes to what these countries. So their currency too is as well stable. That's why we call them majors. That's why a lot of people are trading them. And the reason why they are most traded is what a lot of time, most of the times, we normally use them for what our transactions. So these are the major currencies. So the major currencies includes the Australian dollar, the New Zealand dollar, the Canadian dollar, the Japanese yen, the euro, Great Britain pounds, and the United States dollar, CHF, the Swiss francs. Okay, so these are the major currency pairs, or these are the major currencies in the world. As I said, we're having a lot of currencies in the world, but the most traded ones, the ones that mostly they use it for transactions in this world. So in case maybe you're an African, a developing country, or maybe you are in Asia, a developing country, and you want to maybe buy something in this maybe you want to buy something in Japan, you want to buy something in China, mostly you are going to exchange the thing that you are buying, the product that you are buying, for what? Dollar. Okay, you are going to exchange it with dollar, or mostly you are going to exchange it to either euro or the Great Britain pound. So mostly these currencies are the most traded currencies in the world. So currencies are normally written in symbols or normally in code. You get it? But according to International Organization for Standardization, the first, mostly currencies are written, they are having 3 letters. Okay, the first 2 letters represent the name of the country, and the last letter represents the name of the currency. So you are seeing this abbreviation. So these are the codes. So we have an AUD. So AU simply means what? The first 2 letters represent the name of the country. So what is AU? AU simply means what? Australian dollar. NZ represents the name of the country, which is New Zealand. The last letter represents the currency, which is what? The dollar. So CAD. CA simply means Canada. The last one represents the dollar. You get it? So JP simply Japan. And the last one represents what? The yen. So this is euro, and this is what the Great Britain pounds represent the Great Britain. The last letter is what? The pound. The United States, the last one represents the dollar. Okay, so this is Switzerland, and the last one represents the France. So this is the currency they spend. Okay, so normally when it comes to how currencies are being written, so even if you go to the bank or if you go to the Forex bureau, mostly currencies are written in this abbreviation. You are not going to be seeing them, mostly seeing them written in full, as in they are full this thing. They are normally written in what? Abbreviation. So the first 2 letters represent the name of the country, and the last one represents the name of the currency. So please take note of that. So it was established by International Organization for Standardization. Okay, so they came out with how currency should be written. So categories of currencies include, so we're having types of currency pairs, we're having categories of currency pairs. So as I said, in the Forex markets, we trade currencies in pairs. We don't trade currency as a single currency, as maybe you are trading only the United States dollar. Maybe you are trying to exchange United States. That is not Forex. When it comes to the Forex market, currencies are being traded in pairs. So you exchange currencies in pair. You buy one, you sell one. You buy one, you sell one. So maybe you buy the United States dollar, you sell euro. So this is how currency trading works. Okay, in the Forex market, this is how currency trading works. So we normally buy and sell currencies. You buy one country currency, and you sell what? The other country currencies. You don't sell or buy what? A single currency. You buy different types of currencies, you sell different types of currencies. So that's how in Forex market, that's how the Forex market operates, or that's how the Forex market works. We buy and sell currencies. So currencies are mostly traded in pairs. So we're having different types of currency pairs. So they've categorized them into what? Different types. Okay, we've categorized them into different types. So we're having major currency pairs, we're having the crossing or the minors, and we're having what? the we have an exotic currency pairs. So let's talk about the major currency pairs. So the major currency pairs are they'll always include the US dollar. So the majors includes combining the major currency pairs. So what are you combining the major currencies? So what are some of the major currencies that we talked about? We talked about the Australian dollar. We are having 8 different major currency pairs. So normally when it comes to the major currencies, we combined we pair the dollar with any of the major currencies. So some of the major currency includes the Australian dollar, the New Zealand dollar. So when it comes to the majors, it looks like you are pairing the Australian dollar with the United States dollar. Okay, so that is the major currency pair. You are pairing the New Zealand dollar with the United States dollar. That is a major currency pair. So you pair a major currency with the United States dollar, and the United States dollar too is a major currency, as it is heavily traded in the forex market. So that's why it is a major currency. So you pair any of the major currencies, as you indicated. We are having 8 major currencies, including the United States dollar. So you pair the United States dollar with any of the major currency pairs. So we are having Australian dollar, New Zealand dollar, Japanese yen, Great Britain pounds, the euro, and the CHF. So you pair any of them with the United States dollar. So that is the major currency pair. So example includes the euro, the United Euro USD. We having NZD USD, AUD USD, USD CAD, USD JPY. So these are major currency pairs. Okay, these are major currency pairs. So the majors always include the US dollar. They are the most liquid traded pairs. So when you talk about liquidity or liquid in the forex market simply means a lot of people buying and selling of the same currency pair. So when a lot of people are buying and selling such currency pair, it's the spread or the commission that we are going to be paying on such currency pair or such trade is going to be very minimal or very small. Okay, because a lot of people are transacting, so it is easy for you to get someone who is going to take the other side of your trade. So normally what the brokers do is you are going to be charged very small amounts of money to participate in such market. But if you take a currency pair where most people are not trading, it becomes very hard for you to get lower spread or a lower commission. So when it comes to the major currency pairs, a lot of people are trading the major currency pairs. So the commission or the charges you are going to be paying to execute such trade is very small. Okay, so we have the New Zealand dollar, the Australian dollar, USD CAD, United States dollar, Japanese yen. So these are some examples of major currency pairs. So they are the most liquid traded currency pairs. So as I explained earlier, when you talk about liquid or liquidity, it means that a lot of people buying and selling same currency pair. Okay, so it results in very small charges in the commission or very small charges on a spread or commission you are going to be paying. Okay, so please take note of that. They have high tight spread. Okay, so spread is like a commission or an amount of money charges you are going to be paying on any trade you are going to be executing in the forex market. So the commission you are going to be paying is very small. Okay, so if you are paying maybe on developing country currency pairs, okay, maybe you are trading exotic pair, maybe you are paying for $5 on every commission or per standard lot. When it comes to maybe the major currency pairs, you are going to pay smaller amounts of money to execute such trade. So it is always advisable to be trading the major currency pairs. It is always advisable because you are going to be having small spread, tight spread, or going to pay small commission on the trade you are going to be trading. So the majors are the ones that I will recommend if you are starting out. The major currency pairs are the ones that I'm going to recommend for you. So excluding the United States dollar, we're having 7 major currencies. We include the euro, GBP, AUD, JPY, AUD, NZD, CAD. So we're having 7 major currencies, excluding the United States dollar. So pairing these 7 currencies, so trying to pair them, is what we call cross currency pairs. So we're having the euro, GBP, AUD, JPY, AUD, NZD. So these are all major currencies. So pairing them together is what we call minor currency pairs. But it should exclude the United States dollar. The most important thing is it exclude except the United States dollar. But you having 8, including the United States dollar, you having 8 major currencies. But we are going to, when it comes to the crossing or the minor, you are going to what? Exclude the United States dollar. So you are going to what? Be pairing or combining the 7 major currencies. That's what is going to give you the crossing or the minor. So please take note. So when it comes to the crossing, to some, even though some people trade it, you having some few people who trade it, but it's not as what? It's not as liquid as compared to the major currency pair. The spread that you are going to be paying on such currency pair is also going to be high. And we have the last one, the exotic currency pair. So when you're talking about the exotic currency pair, refers to a pair that includes one major currency and one currency from a developing country. So developing countries are the current countries that they are coming up. So we have in the South Africa, the Mexican currency or the Mexican economy is an a developing country. The South African country too is an a developing country. So merging the majors. So as I indicated, the major currency includes, we are having 8 major currencies. And what? So you take one of them and what? You pair it with one developing country. That is going to give you what? Exotic currency pairs. So there's a wider spread when trading it. When it comes to trading the major, the exotic pairs, because though we don't have a lot of liquidity. We don't have a lot of liquidity trading such currency pair. The spread or the commission or the charges you are going to be paying to execute such trade is going to be very big or wide. So you need to take note when you are trading currency. So you need to understand the type of currency pair you are trading. So I always advise, if you are starting out, it will be better if you are trading the major currency pairs, because you don't pay a lot of charges or a lot of commission or spread when you are trying to execute such trade. So if you are someone who is just a scalper, you are going to find it difficult if you are trading exotic currency pair. So a scalper is going to close his position very fast. He doesn't look for what? A huge pips. So if you are a scalper, it's trading the exotic currency pairs, I think you are going to find it difficult, because the spread alone is going to take majority of your profit. So it's always important it's always important you trade the majors. I will recommend that for everyone as a beginner. If you trade the major currencies, I think you are going to, like, the trade is going to move very fast in your favor. But when it comes to the exotic and the crossing, mostly it takes a very long time. It's going to be moving up and down. Before price will get to your target, it's going to take a very long time. It's always advisable you trade the major currency pairs. I think that is the recommended one I will recommend for you if you are starting out with trading. So at this point of the video, if you have not subscribed to the channel, one thing I've noticed is what a lot of people just take the value out from this channel. They don't subscribe. So if you are new here and you have not subscribed to the channel, it is not going to cost you anything to subscribe to the channel. So please kindly subscribe.